What's up, YouTube? It's your boy Keys back with another video. I was trying to think what I was gonna title it, man. Of course, this is a continuation of the G.F.T strategy. Give me 1 second, y'all. Give me 1 second, so I can pull this up while we talk. Hopefully, y'all doing good. And I know this kind of new. I usually don't stream when I'm making these videos. But as y'all can see, if y'all looking at the stream title, saying that I think I deleted it. I already had recorded part 3 for the strategy, man. I already had recorded part 3 for the strategy, and I honestly I think I deleted it, y'all, cause for some reason I cannot find a video. Can't find a video, bro. So we gotta remake it. Basically, I gotta re-record it and redo it again. So I said, you know what? This time we're gonna press record and we're gonna press stream, so we make sure we got 2 different versions of it. But if you're following along on the walkthrough of the G.F.T strategy, we did part 1. And we actually did a individual trend video. Then we did part 1, and then made part 2. That was the last one that y'all seen. We supposed to did part 3, which I technically did do part 3. I recorded it about a week or so ago. I decided today, hey, you know what? I need to go ahead and edit it up and post it. Man, I go look for the video, could not find it nowhere, and I think I deleted it by mistake somehow, some way. But proof that I know I did it is right here. This is like when I made that video, I was typing these out, explaining like fair value gaps and stuff. I know it's all jumbled up. Come on, man, don't give us lag right here. No, it's all jumbled up, but I was typing all this out when I was recording the video, so I know for a fact that's proof that I knew I did it. It's just I can't find the video. So, but that's what we doing today. We're finna go ahead and knock this out. Step 3 of the G.F.T strategy. We know we only got 4 steps. And then you just cycle them back and forth after that. So part 3, or why I keep saying part 3. Step 3. Actually, let's do a quick review of 1 through 2, and then we're gonna go ahead and say number 3. So number 1, find our higher time frame bias / trend. Find where you're at in the trend. So pretty much we just looked at our higher time frame. Basically, we might look at the daily. Let me hide drawings for a second. Look at the daily, and we'll tell, hey, overall this daily chart is doing what? It's overall moving up. It is moving up kind of slow, but it's overall moving up. Our bias is bullish, okay? Bias is bullish. We think market is moving up. Bias bullish. We look at how the trend is getting formed. We got that higher high there. Then we made a low. Then we made, I believe, another higher high right there. So this is a higher low at this point. Well, it was a lower low. My bad. I'm sorry. It was a lower low, but then we solidified it once we made that higher high. So we overall know we're what? Bullish. After making that higher high, we know what comes next. We more than likely gotta what? Make a higher low. So we should be pulling back. We pulled them back, so we know that hey, we're potentially in that position of that pullback. Okay. So I really don't want to put the drawings back on the screen, but an uptrend, it make a high, a low, higher low, higher high. So we just made that high, made a low, made our higher high. So what's supposed to come next? A higher low. We're supposed to try to stay above this low right here. So we looking for market to what? Make a higher low. Okay, so we know we in that pullback stage, looking to see how far this low is going to go. Okay. So that's step 1. Pretty much like we said, find your bias, figure out where you at in the trend. And that's pretty much it for step 1. Step 2, on a higher time frame, find targets and find solidified levels as we just stated. Let me pull it back up. As we just stated, our target is this previous high. If we in an uptrend, we want to what? Make higher highs, right? So this high over here is our target. That's our target. We want to keep making highs. So we got our target identified on that same time frame. And then the solidified level, like I told y'all, this low down here was the solidified level. Once we made a new higher high, we solidified this low down here. Yeah, it's not a higher low, but it is solidified. Okay. So that would be where we just mark our solidified level. We don't want to see market come back below this candle right here. Let me zoom in some because it might be a little hard for y'all to see. Okay. So we don't want candle to come below this green wick right here. Okay, that's the lowest point we want to see it go. And we want to see that, like we said, we want to see a higher low get formed. So we need to push what? Up to make a higher high. That'll make whatever low is over here, that new higher low for the uptrend. Okay. And then now we're on part 3 or step 3. I don't know why I keep saying part. Step 3, on a higher time frame, find gaps and fair value gaps. And what I mean by that is you want to find it within inside the range of your targets and solidify them. Okay. So, and now we can put the drawings back on. Before we even say anything, well, no, I can go ahead and explain that. Give me 1 second. Let these drawings get back on here, because for some reason they want to lag today. See these drawings. Did the drawings come back? Okay, drawings did come back. Okay, drawings came back. So I think we was using this section over here for the example. Yeah, we were using this section over here. Give me 1 second, y'all. See, I even drew the drawings and everything. That's crazy. Let's just delete this. We'll just do it all fresh. All fresh. All fresh. That's all it is. That's all we gotta do. Messing up my video. I deleted by mistake, man. I don't know what I was doing. I had deleted the video by mistake. Come on now, what's all this down here? Maybe this wasn't. Maybe I don't know. Did I do the drawings right there? Cause why I got so many drawings down there? I'm trying to delete everything so y'all can see all fresh. Okay. One more. Then we ready. All right. So say we just looking at this one section here. And let's rewind it back. Start new. Say we're just using this section here. Okay. Alright, so we're using this section here. We looking at this section right here is overall what? Up. It's making an uptrend, right? We got higher high, low, higher high. Overall is moving up. Generally is moving up. Our bias is bullish. Target is, of course, what? The previous high right here. This kind of high is our target. We're trying to make what? Keep making higher highs for a uptrend. Okay. Last solidified level we had this high here, right? We broke that high. You see that? We broke that high. The last true solidified level is down here, right here at this low at 4,657. Reason being is because what? Look at this trend. We got our high. Hold up. We got our high. We met our low. And then right here is when we cross that high. This green counter right here. The lowest point was A. Okay, so that's the true solidified level. Now we do have higher lows, but I like to have one that I call my true solidified level. So, and the higher lows are solidified levels. These are solidified levels. It's just within inside the bigger trend. That's the thing. It's within inside the bigger trend. Okay. But like we said, that's the last solidified level down there. So our target up there, our ultimate low that we don't want market to break is this 46.57. Now, like I said, y'all will see me speak and say, hey, oh, I'm using the higher low as my solidified level, because higher lows are solidified levels. It's just, like I said, it's within inside the trend. So technically this is a solidified level here at 4,889. This is a solidified level here. Was after the red, my bad. I'm sorry about that, y'all. Sorry about that. Right here. Right here. We got another one. Right there. You see that? So each of these higher lows are solidified levels. You see that? So we got high, low, higher high, lowest point right there. I skipped one. I ain't even see that little wick right there. My bad. High, low, higher high, lowest point. in between the two is right there, between the old high and the new high. We got our high, our old high, our new high, lowest point. It really is right here. My bad. Let me see. Lowest point right there. My bad. High, new high. Dang, I ain't marked none of these. See, zoomed out. You gotta be close. You gotta be close in. I thought I had it on there. I don't know what it was sitting on, but it's the lowest point between them two. Then we got our new high, low. This is one right here. Let me see, right there. And then we had one right here, but it got broken, so that's why we don't have the drawing there. This was a solidified level, but it got broken. Okay, so like I said, all of these count, but me personally, I put it as a pink line just because to let me know, hey, these are higher lows within inside a trend. You know, it's a higher low within inside the trend. It's not out of the trend. If you get what I'm saying? It's not the big scheme. That's basically what I'll say. The big scheme, solidified level, or bigger picture macro is this the high. This was the lowest point before we made a new high. That's the main solidified level I'm checking out. These are with a trend. These are trends with inside the big trend. Okay. Now, like I was saying though, for the part number 3, and I will have to edit this probably because I know I do a little bit extra talking. For part number 3, oh, I keep saying part. Step number 3, on a higher time frame. I don't know what that noise was. It might have been Discord. On a higher time frame, find gaps and fair value gaps. So like I was saying, you will look for it in between your solidified level and your gaps. Okay? I mean your target. So if while we're looking at our solidified levels, like we said, these do count as solidified levels. We got to find our gaps between this target high and then the most recent solidified level we got. So we want to look for gaps all in between here, fair value gaps and regular gaps. Okay, it got to stay within this range. Okay, now here we go. What are gaps? And how do you find gaps? Let me go to the drawings I had. Okay, here we go. Now what just happened? We just seen it. Where did it just go? There we go. So what is a gap and what is a fair value gap? Okay. Gap. Requirements for a gap. Why do we keep doing this, man? What is going on? Is it because I got it on replay? Like, I don't know why it won't let me. It will keep scrolling over like that. But requirements for gaps. A gap must include 2 candles. So it's a 2 candle pattern. We must have 2 different candles. Okay. Step number 2, candle 1 and candle 2 must leave a gap in between each other, no overlapping. So the first candle we look at and the second candle, of course, they supposed to be back to back. The candle's supposed to be back to back. The first candle we see and the second candle we see, no matter if it got a wick on it, if it don't got a wick on it, it must leave a opening in between the two, which is a gap. Okay, that's plain and simple. That is exactly what a gap is. It's just a gap between 2 candles. That's all. Just a gap between 2 candles. So where one candle previous closed at, the opening or the close of the other candle left the gap between them. Okay, that's plain and simple. So biggest thing you need to remember for a gap is a 2 candle pattern. All the requirements for it is candle 1 and candle 2 must leave a gap between each other, not overlapping. Okay, and that's a gap, plain and simple. Now for a fair value gap, it's a little bit more difficult. I don't know why. What is going on? Why I can't bring it over? Is it because I got it on replay? Or what is it? I don't know why doing it. Every time I try to scroll. Unless I'm like somehow zoomed in, I don't know what's going on. But for a fair value gap, let's do that. For a fair value gap, requirements for a fair value gap must be 3 candles. So regular gap, we said what? It's supposed to be a 2 candle pattern, right? For a fair value gap, it is a 3 candle pattern, okay? 3 candle pattern. So we got 1 candle here, 1 candle here, 1 candle there. 3 candles back to back. Candle 1 and candle 3 must have wicks that go into the body of candle number 2. So this first candle we got, it must have a wick, which it does. It got a wick on it. Must have a wick that goes into the body of this second candle, this middle candle right here. It goes into the body. This wick goes into the body of it. And then candle number 3 also must have a wick on it that goes into the body of number 2, the middle candle. Okay. So our first candle and the third candle must both have a wicks that goes into the body of the middle candle. Okay. Number 3, candle 1 and candle 3 wicks must not overlap, thus leaving a gap. So the wick of candle number 1 and the wick of candle number 3, they cannot overlap each other when it comes to crossing the body of the middle candle. They must leave a gap between each other. So see how this wick go up to here, this wick go down to here, and it left a gap in the middle. That is called what we call the fair value gap. Okay, that's what we call the fair value gap. And that's literally the only requirement. We just have to have 3 candles. Candle 1 and candle 3 must have wicks on them. And the wicks must go into the body of the middle candle. And they should, the 2 wicks that we have should not overlap each other. Okay. Now, say if we got one candle where it got a wick on it, but it don't go into the body of the middle candle, not a fair value gap. Okay. Don't go into the body, not a fair value gap. If we got no wick on it, no wick on it at all, and one of the candles do got a wick on it, not a fair value gap. It gotta have a wick. Not a fair value gap. It has to have the wick on it. Okay, has to have the wick on the candle. Come on, let me do this. Man, trading view really trying to give me a hard time today. It was lagging at the start, then now. Then it didn't want to let me move them sideways and stuff. Now it's not trying to let me click on it. But yeah, it must have a wick on it. See, look, why do it not? Why is it? I think it's because I got on replay. For some reason, they don't want to let me move over. But that is the requirements for a fair value gap. So regular gap, 2 candle pattern. 2 candle pattern. Pretty much just first candle and second candle, they just can't overlap each other, just leaving a gap, which is called a regular gap. Fair value gap, 3 candle pattern. Candle 1 and candle 3 must both have wicks that go into the body of the middle candle without overlapping each other, and that leaves behind the fair value gap. Okay? So that's explaining the gaps, fair value gaps and regular gaps. Now let's go back to the rule or the steps. So step number 3, like we said, on a higher time frame, find the gaps and fair value gaps. I need to put in parentheses within your target and solidified levels. Okay? So let's go back to the chart. Since we know what it is now. Go back to these charts. Like we said, we got solidified levels with these pink lines. And the main ultimate one we don't want is that red line down there. But market could respect these higher lows down here. So we got to find what? Our gaps between what? The target, which is 5,323, and our solidified level we had, which is at the most recent solidified level, which is at 5,079. Okay, so we're looking for gaps and fair value gaps in between this range right here. Okay, in between this range. So if I look here, zoom in, let's just start with the first couple counters. Right here, we left the gap. We can mark that out. We got a fair value gap right here. We got counter one got a wick that go in the body of the middle. Counter three got a wick that go in the body of the middle counter, and then it left the gap in the middle. Okay. And for me personally, I like to turn on this magnet on the side. Hold up, I don't know if y'all can see. Right there. I like turn on this magnet, and I like put it on strong when I put any lines, when I put any boxes, all that. I like using that magnet for it. Okay, just make you pinpoint it a little bit more. So we got one fair value gap marked out. Okay, keep looking to the left, keep looking to the left. These two counters overlap each other. They barely do, but they overlap each other. These two counter wicks. No fair value gap. We got one wick here, no wick here, no fair value gap or no regular gap. Keep moving left, keep moving left, and look like we got a fair value gap here. Counter one, wick goes into the body of the middle counter. Counter three, wick goes into the body of the middle counter. They left a big gap in the middle. Fair value gap. Okay, fair value gap. Mark it out, drag it all the way to the left. Right. Okay. Scrolling down. We got another one. Let me see. And if you ever can't really tell, you can do one or two things. If you got the magnet on, you can go ahead and try to draw the box to see if the candles overlap the middle. Like, you see how close it is. So if I zoom in, I can tell, hey, it did get into the body. See that? Or you can do this. You can hover over this candle that you not sure if the wick got into the body, and look up here to the top of the screen. Oh, I gotta scroll up. Right here at the top of the screen, see how I say OHLC? That's the open, the high, the low, and the close of whatever candle you got your mouse hovering over. You can put your mouse over that candle, look at the low, which says 5,179. And then if I look at the middle candle and look for the close of the middle candle, because I know that's including the body. So the C is 5,179.50. So 5,179 flat and 5,000 is less than 5,179.50. So that means it's lower than it. So that means it's included inside the body. Okay. So we got a gap there. We got all fair value gaps. We ain't got no regular gaps yet. See, we got one more here. Look like. Mark that out. And you really want to mark all the ones that you can find. Like we said, above your most recent solidified level and below your target level. You want to find all of them, mark them all out if you can. The only one exception y'all will see me do on stream is, like, say if we got gaps inside of gaps or they overlapping, I will use the bigger gap. I want to mark both of them if they overlap. Okay, so let's keep going left. Let's see if we got some more. Don't look like we got any more above. Yeah, we do down here. Over here. And we got one right here. So let's mark it out. Got that one there. And then we say we have one more, like right here. Yeah. Okay. But yeah, that's the one exception I do. Well, technically it's another exception. But one exception is if they overlap each other, I just mark the bigger one. Not unless if it's like super huge, then I'm not marking it. But usually I mark the bigger one. And then also another exception I do is, say if I'm trying to fix this real quick. Give me 1 second. Say if price is all the way up here, right? Price, we sitting all the way up here. A lot of times, if we sitting this high up, I just mark them like the most recent 3 or 4, and then I'll wait before I mark these down here, just because I'm like, hey, I don't really like a lot of drawings on my screen because it can, play with your eyes a little bit. So I probably just mark these 3 or 4 up here. And then if we do break these 3, then I'll go back and mark these. But of course, for learning purposes, I'm gonna mark them all just so y'all can see. Okay. All right. So we got our gaps marked out. We didn't have any regular gaps. We just had all fair value gaps. And we don't really have to mark any over here just because they more likely will overlap these ones that we got. Okay. So now we did step number 3. That pretty much was all number 3 was to mark out the gaps in between the target and the most recent solidified level we have. Okay. So that is step number 3. Okay. Now, I know I'm doing a stream, so we're going to go ahead and go through number 4. But for the recording, I might edit it and chop it up into 2 different parts, which is completely fine. Okay. So, step number 4. On a higher time frame, identify entries off gaps and fair value gaps. Now, what do that mean? Pretty much, we're looking for our entry off of the gaps that we drew in between the two, the target and the solidify level. Let me, well, we ain't gonna delete it because in case it break them, I was gonna say let me just delete these other lines so y'all won't be too overwhelmed with all them lines, but it's completely fine. But yeah, we're looking for entries off of these gaps. Okay, off of these gaps. So what do I mean by that when it comes to entries off of the gaps? Where is that? There it is, right here. Rules for fair value gaps. Okay. So basically for entries. If we build base above a gap, expect for the market to continue up. Okay. That's rule number 1. If we build base above a gap, so say we got this gap right here. When we start building base, and what I mean by building base is making an uptrend above it, making some type of trend above it, I expect what? Market to keep going higher. Okay, if we build an uptrend above it, I expect market to keep going higher. If we build base below a gap, expect for the market to continue down. So we build a downtrend underneath the gap, I expect market to what? Keep going lower. Once we build that downtrend, I expect us to keep dropping further. Okay. And reason being is because pretty much when we make that uptrend above the gap, pretty much market is telling us, hey, we're not trying to come back down here to this gap. We're trying to go move up, possibly up to another gap, another zone, another area, another high. We trying to go up there. We're not trying to come back down here. It's almost like sealing it off once we make that uptrend. Okay. Same thing for the downtrend. We make a downtrend underneath it. It's pretty much saying, hey, we're not trying to go back up there. We're trying to come down to the next zone, the next gap, next low. We don't really want to go back up there. So that's why I said when it build base above, expect it to keep going up. If it build base below, we expect it to keep going down. Okay. If we close in a gap, assume that it will go to the other side of the gap. So what do this is my assumption. I'll say it's about, I'll be like 80% sure or 80% confident in that it's going to do that. Is to say if we get a green counter closure into this gap right here. Green counter close into the bottom of the gap. I will, like I said, I'm about 80% sure, hey, it should go to the other side of the gap. It's going to the other side of the gap. So green counter closure inside, I'm expecting the market to come to the other side of the gap, especially if it can build base inside of the gap. Okay, if we build base inside of the gap, I really even more confident in it. And then same thing if we coming down, if we get a red candle and it closes inside the gap, I'm expecting what? It to come to the other side of the gap, to the bottom of the gap. Okay. So those are literally the only 3 rules we got for the fair value gap. If it build base above, we make an uptrend, I'm looking for it to continue going higher. If we build base below and we make a downtrend, I'm expecting to keep going lower. And if we close inside, I just expect it to go to the other side of the gap. It's literally the only 3 options I give it when it comes to reading our gaps. So if you could start watching my live streams and see me trade every day, y'all will see. Literally, that's all I do every time. I just go find the gap, look for a trend to build above or below, and I just trade that direction. Okay. Of course, I tend to try to stay with my overall bias, but sometimes if you can get some scalps when it's coming off daily trends and stuff. I catch them here and there. But those are the rules for the fair value gaps, okay? So, like we said, for step 4, let me do this. For step 4, find your entries. Find your entries off of the gaps and fair value gaps, okay? So let's go back to the drawing. So if we want to be bullish, right? We want to be bullish. We're looking for what? We're looking for a uptrend off of any of these gaps. The top of any of these gaps, we want an uptrend to form, okay? If it happens here off of this gap, we like the longs. If we can get an uptrend off of this gap, we like the longs to the target. We get an uptrend off of this gap, like the longs off the target. Any gap, it don't really matter. Any gap, if we get an uptrend off of it, we like the longs. Now, preferably, we will want the uptrend to form where we don't have any gaps above our heads to stop us. So, like, say if it happens down here, we get an uptrend down here. Well, we do got a gap right here to kind of block us from going higher. You get what I'm saying? So it can make the uptrend and come straight to this gap and then start stalling. So we prefer it to happen, you know, up here where it's a lot cleaner, a lot clearer, and everything. Okay. But that's pretty much all we're looking for is just uptrend forming off the top of a gap. Now, that's just pretty much the basic, the easy entry way, like the general how we looking at it. But of course, G.F.T, we got our own model for entry. We got exactly where you need to get in at for your entry. It's right in the Discord, so if y'all want interested, of course, join the Discord. G.F.T trading, and it's also on the YouTube, so you can screenshot it, whatever you want to do. In a second, right here. This is our entry model right here. So G.F.T entry model, okay. Like I said, building base, that's what we want above a gap, but we gotta know where do we get in at on that trade, okay? Where's the A plus entry? Where's the B plus entry for our trades, okay? Now, for a B plus entry, B plus entry occurs when number 3 crosses number 1. You set your stop loss at number 2. So if we looking at an uptrend, we got, of course, 0. This is where the uptrend first starts, and it's like the first low. We got our low, our high, our low, our higher high, another low, another high. Okay. So I just use these numbers because, hey, this was the 5-point thing where we could have made a 3 uptrend. Okay, so 0 is here. We got 1 is our first high. Number 2 is our second low. And soon as we cross number 1, right here, boom. When we cross number 1, what is that? That's a what? A new higher high. Okay, that's a new higher high. You see that? Well, if we made a new higher high, we got old high, new high. What's in the middle? Solidified level. Number 2 becomes solidified once we cross number 1. Okay? Once we cross number 1, boom. What I said, when 3 crosses 1, that's our B plus entry. So boom, you can enter in. Soon we cross number 1, you can enter in. For that B plus entry. You enter in and your stop loss is at number 2 because number 2 became solidified once we cross number 3. Okay, once we cross number 3, cross number 1, my bad. Once we cross number 1, it's solidified number 2. That's that B plus entry. Now, reason being, of course, before I go into that, of course, for these entries, we need to see what? A high. So we need a green candle, we need a low, we need a red candle. And then this has to be the new higher high. So what does that mean? We must see some type of green candle getting created before we take number 1. So say if we got green candle here, red candle, and then another red candle come across number 1, it doesn't count. That's not a higher high because it's a red candle. You gotta have at least a green candle get in the middle of it. So if we had a red, then a green, and then we came back up and took a high, even if it was a red candle, it still counts as a higher high, and that will be what? Number 3. Okay, that's our new higher high. So we gotta see high, low, higher high. Once that higher high get created, boom, enter in. That's number 3. My B plus entry stop loss is at number 2 for that solidified level. Now, why is it a B plus entry? Reason why it's a B plus entry is because this is the initial start of the uptrend. Okay, this is the initial start of the uptrend. We don't really know how high number 3 is going to go. Number 3 could push all the way up, and go break other highs and shoot real hard. And number 3 can very well just barely come past number 1 and then come right back down. Okay, it can come right back down after taking number 1. So with number 3, you pretty much taking a continuation trade, basically. You're taking a continuation trade just to see how high you can go. Okay, that's why it's a B plus entry. Because yes, you might see profit, but you don't know exactly where it's going. Okay, you don't know exactly when it's going to reverse to do its pullback. Now for an A plus entry, when we have a green candle at number 4, we set our stop loss at number 2, just like we said for number 3. Set our stop loss at number 2. Okay, I mean just like for the B plus entry, we set it at number 2. Now for number 4, same thing. We need green for a high, some type of reds coming in for make a low. Need some more greens to make another higher high. Some more reds to bring, lead us to a low. And then, like we said, soon we get our first green candle after identify that we making some type of low. Once we see some red candles, that first green candle we get, as long as we don't take number 2 out. If we come down and take number 2 and then get a green candle, it don't count because it broke this uptrend. Okay, it got to stay above number 2. But the first green candle we get, we enter in instantly. We enter in. Stop loss will be at number 2. Targeting number 3, potentially to the next high that we may have. Okay. Now, reason why we can do that instead of us doing it for number 3, where I told you we gotta wait until it crossed number 1 and make that higher high to enter in on number 3. Reason why we had to do that for the B plus entry is because on the B plus entry, what I said, we initiating the uptrend. Okay, so we don't got an uptrend yet. We trying to build an uptrend. Okay, so we got high, low, higher, high. We trying to build that uptrend. If we got in off the first green counter right here, down here, it doesn't necessarily mean we gonna come up here and make a higher high. We can consolidate. We could be setting up to make a lower high, to make a downtrend. Anything can happen. We did not establish an uptrend yet, so that's why we have to wait until number 1 get crossed, then that establish the uptrend. Now, for number 4, for the A plus entry, the reason why we can enter in off the first green candle with number 4 is because we already established with 1 through 3. We already established that, hey, we're in an uptrend. We already established it. So now all we just need is a pullback, and then that first green candle, hey, let's get in, take it back up, because it should be keeping its uptrend. Okay. The reason why number 2 is still our stop loss is because number 2 is still our last solidified level. When we cross number 1, number 2 became solidified. That's our solidified level. When we pull back here, number 2 still the last solidified level we got. So that's why no matter if it's the B or the A entry, number 2 is your stop loss. Okay. Now, once we cross number 3, number 4 will be solidified, and you can bring your stop loss up to number 4. But as of now, number 2 is the last solidified level we got. Now, why is this an A plus entry? The reason why it's an A plus entry is, like we said, with number 3, we don't know how high it's gonna go. Okay, we don't know where it's trying to go. Like we said, it can barely take 1 and come right back down. Anything can happen. With number 4, we know exactly where it should go. It should at least come to number 3. We know exactly where it should go. If it's an uptrend, it should at least go to number 3. We know exactly where it's going. It already established the uptrend. We don't have to guess if it's an uptrend. We already know it's an uptrend. Now, if it want to break the trend, cool, fine. It is what it is. But hey, we know exactly where it should go. We not scared, to get in that trade. And then also, a lot of times, not all the time, a lot of times, number 4 will give you a better risk reward. So if we looking at this risk reward right here for number 3, when it crossed number 1 and our stop loss at number 2, this is our risk reward. If we was aiming for number 5, where number 4 we got in on that next pullback. See that next pullback, the stop loss still the same spot, but and target at the same spot, but our risk reward is a lot better because we can enter in off the first green down here. Now, like I said, not all the time, but more times than not, it is like that. But sometimes you'll get where the pullback just be real slight, and then number 4 happen up here, and the risk reward is nowhere near better than number 3. So you'll see it. You have to just pick and choose if you want to take it up there or not. But that is the only 2 entry models when it comes to G.F.T. Okay, those are the only 2 entry models. So if you ain't entering a nice way, you taking your own risk, okay? And of course, like sometimes I do continuation entries. Sometimes I don't always just jump in off this model, but this is 80% of the time. If y'all see me trade, this is what I'm looking for every single time. Really, I say 85% of the time, because of course sometimes we human. I'll jump in off of continuations and things like that, but about 85 to 90%, I'm looking for this every single time. Okay, this is what we looking for. All right, I know I did all that dang talking, so let's go to the charts and we're gonna go ahead and wrap this up. So pretty much this is what we looking for. Looking for that uptrend to form on the gaps. Okay. Now what we want to see is what? We want to see that 1, 2, 3 happen. We want to see either 1, 2, then boom, 3 when we cross number 1. We should get up to the next target. We aiming for the next target. But like we said, we don't know. Number 3 could pull right back. Okay. So that's literally what we'd be looking for. But we looking for it to do it off of the gap. It gotta do it off of the gap. It can't do it above the gap. We want it off the gap. Okay. We want it to touch the gap if we can. Okay. So we press skip. There we go. 1, 2, 3. That would have been your entry. You enter in. TP would have been, of course, these highs. Stop loss down here. Of course, your stop loss is a lot. The risk reward is not the best when you look straight at the daily chart. Okay. I'm gonna make another video breaking it down on how to get this risk to reward more fine tuned. And really all it is just do these same steps, that 1 through 4 steps, just do it on the lower time frame. And that's how you can fine tune it a little bit more. So you literally do the same steps, you just do it on lower time frame, and then like say we go to the hourly. You go to the hourly, look where the solidified level was at. Last solidified level was up here. So we could have probably set stops here. We could have set stops up here. And that would bring our what? That would have brought us up. See that? Bring our stop losses up. Okay. But of course you had to find the gaps that it's supposed to use to protect and everything. But we're gonna just stick with the daily so y'all can see how I end up looking. But made that uptrend. This is that, like we said, this is that B trade right here. It's the B trade. We don't know if it's gonna go to the next target or not. It very well come back down. We let it skip, came back down. If we can get the first green, now we expect the high to get taken. Okay. Oop. Well, it didn't take the high. Hold up. Do we got another gap? Give me 1 second. I got alerts going off. Give me 1 second. Alright, we did make another gap, I don't believe. Let me check. High, low, high, high. We should have took that high. I don't know why we didn't. See, did we have another gap? Might have had a gap sitting up here that was on the left that I didn't mark out. Trying to be quick for the stream. Is it a gap right here? Yeah, it is a small gap. That what it was. See, that's why it's important to mark all your gaps. I was trying to do it quick for the stream. Because it should have went up there unless it hit a gap, of course. Unless it hit a gap. That's the only way it wouldn't. So let's see. If it didn't close past that gap, that's probably what caught it. And look, we doing all this live, man. I ain't gonna fake it with y'all. Yeah, we didn't close past the gap. That's what it was. Cause I'm about to say it should have went in. It should have went up there and made a higher high. I'm about to say it should have made that higher high. But it couldn't close past that gap, so that would stop it. But we still look for the exact same thing. We look for the exact same thing. So we just got another high again. Okay, we got another high again. If we can either make this higher high above, or if we make a low and another high, we get back in the long. So same thing. We win, lose, or draw. So now it broke that high. Back in the longs again. Stops at the most recent what? Solidified low. Now target. These targets already got taken. Yeah, these targets already got taken. Let's see. See, we got some targets to the left. Of course, it'll be gaps, but I'm just gonna aim for a high. Okay, let's see. And then we just let it play out. Go to either the highs or the next gap that we got. Okay. And still letting it play out. And then boom, TP. Now, like we said, it wasn't. Like I said, we didn't mark out our gap like we supposed to. That one little gap, and that's the biggest thing. You gotta mark out all those gaps. That one little gap held us up. See that? Had our uptrend perfectly fine, but we failed to close above it, and that would made us lead to this reversal, to this downtrend. Okay. But yeah, we're gonna go ahead and end it right here. That's the G.F.T strategy, man. Really ain't much to it other than, like I said, I can teach y'all how to fine tune it a little bit. And all it is just going down to that lower time frame and identifying your solidified lows and stuff. Okay. And that'll make it where you don't risk as much. You can fine tune it. You can see the reversals happening before. Cause I think when we got in, we said, hey, this low here and this low here. We could have been in the longs, new solidified level came. We could have brought stops up here, and then boom, we broke it. We would have took our money, waited until another uptrend. We would have avoided that loss being on a lower time frame, fine tuning it. Then hey, broke back above, wait on another uptrend to form. We got high, low, higher, high. That's our B play trade right here. Enter in, stop loss down here, and aim for what? The highs. Okay. Then it just kept rolling up. Okay. But we're gonna go ahead and end it right here. That was all the steps. Hopefully y'all enjoyed this. I'm gonna make a new updated version probably a couple months down the line, but it's the first time making it, y'all. Y'all know I gotta keep it real. I wanted to get it out for y'all. That's the biggest thing. I wanted to get it out for y'all, but we're gonna make an updated version, a lot more clean explanations. But yeah. Hopefully y'all enjoyed it. Y'all let me know what y'all think about G.F.T's strategy. And yeah, your boy Keith is out. Peace.